Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Jeff Kilburg, CEO of KKM Financial, for an update on the earnings that we just got out this morning from the banks. We'll also talk about inflation and a potential shift in Fed policy. Jeff, it's great to see you. Welcome back to Trade Talks. And a lot has happened this week. We're starting to see inflation data that has cooled off a touch. So the question is this a trend make, or is this going to impact Fed policy? Or do we have to wait till Wednesday and hear from Powell himself?
Well, Joe, yes, it has been a tremendous week. You're seeing the Nasdaq 100 up about 4%. The continued optimism in the marketplace has pushed the S&P 500 above 4,500. You're seeing volatility down at 13 from a VIX reading. So to answer the question, yes, we did see inflation cooler than expected, abating faster than expected. So this kind of feeds into the thesis. This is not just a FOMO situation where the magnificent seven stocks are leading. You're starting to see breadth. And as we see earnings season kick off now, you did see the banks come out really with a bang. JP Morgan has really been a darling ever since they kind of taken over some of the distressed regional banks. And again, we saw them move higher today. So the bigger banks are doing better. We're going to see Goldman Sachs, Bank of America, Morgan Stanley next week, but I'm also focused on Tesla. I'm also going to be interested in Netflix. We also have American United Airlines. So I'm really interested to see the continued narrative of the strength of the consumer that's coming out in all different areas, not just the fantastic or magnificent seven stocks that we know, those FANG stocks that really recovered from just a beating in 2022.
So the market is largely pricing in another interest rate hike in July, right? So I guess really when we think, because I mean, Jeff, for the entirety of the year, with the exception of earnings and some bank failures, everything has been predicated on the macro and what the Fed is doing. So I guess really what the question is, what does Powell say? How is it interpreted? And how does the market think policy is going to shape out for the rest of the year? Because they really haven't deviated from the position and some of the hawkishness that they've had all year.
Well, Jill, I'm going to date myself a little bit, but here, going back to Looney Tunes, Porky Pig, he would say, that's all, folks. So I think that is what Fed Chairman Powell is going to say. That's all. This is the last rate hike. I don't think they actually even need to do this rate hike, but they have overtly telegraphed the fact that they are going to move interest rates one more time. They're just kind of concerned because they've had a historic move in rates, right? 500 plus basis points. And we haven't really seen it affect the consumer. We haven't really seen it affect the economy. Yes, we are seeing earnings down about 7% year over year. Yes, we know there's slower growth, but in the bigger picture, we saw the market move higher in the last 2 months. It broke out of the range. We talked about a lot here on Trade Talk, the range bound trade of the S&P 500 got above 4,200. It's off to the races. So I think we're very concerned about the Fed, but I think this gives them cover that they're going to sit and watch and wait. And these higher rates, this cost of capital, if you think about the Treasury curve, where I cut my teeth, Jill, you know, they've had inversion. The 2 years been higher than the 10-year for quite some time. That's been deliberate. That's been by design for the Fed to try and make the cost of capital more expensive on the short end of the curve. It hasn't really impacted. We're going to see if it has that ability. We saw the 2-year note drop back down. We even saw the 10-year note cool and go lower in yields off of that better than expected inflationary data. So I hate to say Goldilocks, that's overused, but the soft landing we've been hoping for and expecting, it feels like it's here. We are going to get really important forward guidance from all different corporations reporting the next couple of weeks. And then, of course, the last week of July, we're going to see what tech has to say because it's been sensational around. Look at NVIDIA up over 200% year to date.
Yeah, well, Jeff, it's so interesting. The first half of the year, despite the risks and the challenges that are out there, the market continued to climb that wall of worry. So really the question is, can it continue that trajectory into the second half of the year? Because those very same risks still exist. But if we're able to get through earnings season and guidance is solid and the perception is that interest rates have potentially peaked, it sets up for a strong rest of the year as well. I guess from a management perspective, with stocks and valuations where they are right now, is it too late to put that money to work? Do we start to see some sector rotation? Because to your point earlier, breadth is expanding.
Well, look at a name like United Health, still down year to date about 15%, but it's up 8% today. That was all due to their forward guidance. So I think there are opportunities in specific stocks and sectors. But Jill, we talked about this year, and it's so easy to get caught up in all the noise. But when you talk about the Fed's balance sheet still being over $8 trillion, we talk about a post-midterm election year, which I talked a lot about going into 2023. Historically speaking, the S&P 500 going back to 1950 has returned close to 15%. We're already there in the month of July, so we're gonna have to see if we continue to move higher. I don't think it's gonna be a straight line. I don't think volatility is gonna sit in the 13s and 14s from a VIX perspective. But yes, it seems like a lot of the people that were the bears, you're starting to see them flip a little bit. That makes me a little nervous, no doubt about that, Jill. But I do think the market's gonna continue to grind higher, but we are gonna have fits and starts. You will see the market pull back a little bit here. It makes sense that people are gonna start taking some profits at some extent, but right here, right now, Jill, we're excited about earnings season. The Fed is kind of locked in. We know where they are. There's no real curveball. We don't think they're going to have a policy misstep anytime soon. But if they don't really signal that they are going to sit on their hands and pause for the rest of the year, that could be problematic. That could be the curveball no one's talking about.
Well, Jeff, it's so interesting when we talk to strategists and portfolio managers on the show, and you're no stranger to model portfolios, we're starting to hear sector and stock picking through either momentum or through factor, right? Versus bottoms up analysis where you're looking for, a specific name based on fundamentals, but they're really going more towards what does cash flow look like in the balance sheet? What does dividends look like? They're going for more factors than they necessarily are from what you would think of traditional bottoms up analysis, which I think was interesting. I don't remember covering it, talking about factors as much as we have now.
Yeah, I think factors, people are really trying to differentiate themselves. But one thing I'll take a step further, we're talking about how you own the market. And one thing, as you know, the Essential 40 model portfolio, which I manage, is 40 stocks, but it's very different than the typical market cap weighted characteristic of the S&P 500 or the price weighted characteristic of the Dow Jones. We own it in an equal weighted fashion. So you talk about the Invesco RSP ETF, which is the equal weight S&P 500. People are starting to realize that if you own the market, no matter what market you own, if you own it in an equal weighted manner, longer term, it has the ability to give a better, potentially smoother risk reward profile. So I think owning the Essential 40 model portfolio equal weight, that's been a difference, just not in 2023, but in 2022. And the old adage, Jill, there's a way to make more by losing less.
Good advice as always. Appreciate the insight, Jeff. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.